Your rental property insurance just doubled and the added costs are killing your profits. We've got strategies to help you fight back. Hi, I'm Brian Bean with Dream Big Property Management here in Riverside, California. Today, we're talking about the insurance crisis that's inflating rental owner costs and causing rents to increase. Many people think this problem started with the LA fires, but it's been brewing for a few years now. Even before the most recent fires in the Palisades and Altadena, major insurance companies were already abandoning California. All states stopped writing some policies in California in 2022, and to get them back, the state had to approve a 34% rate increase. AmGuard stopped writing policies in 2023. Farmers withdrew in 2023, and a bunch of their subsidiaries also reduced coverage. State Farm this year is non-renewing a ton of policies, and in June, Nationwide stopped renewing policies, and Liberty Mutual started notifying customers that they're not renewing condo or renters policies. Meanwhile, California's FAIR Plan, which is like the safety net for people who can't find insurance on the private market, has nearly tripled in the number of policies since 2022, with rates more than doubled. This is not just our issue. Insurance costs are up everywhere. But California has more people than any other state. It has high costs for everything, and it has high risk, fire being among the most obvious. In a free market, the price of insurance rises and falls with the risk factor. California has a state agency that dictates what insurance companies can charge, and if the insurance companies don't like the limit imposed, they can leave. Some obviously have. Several of our rental investors have received non-renewal notices this year. Those who didn't, they're getting price increases of 50% or more. We're having the same conversations over and over with every single one of our clients, and it's not just them. The rising costs mean higher rents for residents too. What used to be an $800 a year insurance policy is now commonly $2,500 a year. If a property's in a fire zone, forced onto the FAIR Plan, it's double. We've even heard people talk about premiums of $6,000 to $8,000 per year. People complain about skyrocketing rents. This is one of the contributing factors. If the property owner used to spend $75 a month for insurance and now they're shelling out $500 a month, the renter is going to feel that pain too. This is not greed, it's survival. The reality is this is not going to get better anytime soon. Insurance companies cover the entire country. And California fires are just part of the problem. Hurricanes in the southeast, ice storms in the upper Midwest, tornadoes and flood in Texas and the plains. Billions and billions of dollars in claims, plus rising costs for repair materials and labor. Does anyone see an end to this problem? No, because even if the risk completely disappeared here, insurance companies spread out the pain to everyone. Texas feels California fires, and California feels Texas floods. There's also a psychological element at play here. Everybody is already talking about the cost of insurance going up. Homeowners are now preconditioned to expect price increases. Many are just relieved when they don't get a cancellation. They jump at the chance to write that check. But there are ways to dull the pain. You just have to take a little bit of initiative. Last year, my insurance company on our personal residence gave us a price increase of 50%. It went from about $1,200 to $1,800 a year. This year, it went up another 45% to almost $2,600, and that caught my attention. Turned out, the insurance company was charging me for being in a fire zone, even though my home is not inside a fire zone. I pushed back, and I got a decent re-rate and a price drop, but it made me wonder how many other homeowners in my neighborhood didn't realize and just accepted a new price. Here are some avenues that you can explore to try to reduce the rising cost of insurance on your property. First, we've been talking about risk, so let's get more into risk. Insurance is all about risk. The riskier the situation, the higher the cost of your insurance policy. And no surprise, insurance companies will give discounts if you create, for instance, defensible space around your home. If you have Class A fire-rated roofing, if you add monitored security and fire systems, or if you have upgraded fire-resistant materials. Ask your insurance broker for a list of the discounts available. Next, be strategic. Do not wait for your renewal offer to just show up in your inbox. Start shopping 60 to 90 days before renewal because the market changes daily. Also, you don't want to get caught on deadline with no time to shop and you just have to take what they give you. Work with independent brokers who specialize in California rentals and have them price it all. Bundling your landlord, home, auto, and umbrella for multi-policy discounts gives you more bargaining power. Third, optimize. Are you properly covered? Look hard at your coverage levels and make sure they are reasonable. Costs to repair or rebuild are much higher than they've ever been, so take note. Consider the worst case scenario and do the math on what it would take to make you whole again if you lost everything. 4, your deductible. This is a risk versus reward consideration. Have you ever made an insurance claim? Is your home in a high danger area? Is the lower premium worth the risk of actually having to make a claim and pay a higher deductible? And lastly, pay attention. When your policy offer shows up, do not just gloss over it. Get into the details. What are you being charged for? What coverages should be increased and what can be decreased? Are you being charged for a danger that you shouldn't be charged for, like I was? Talk to a broker, compare policies from multiple insurers. This can help you see differences and ask better questions. By the way, if you need a referral to an insurance broker who specializes in rental properties, let us know. We can connect you with a local professional. And also, for those who are actively looking to grow a rental portfolio, insurance has become a key factor. Our wisest investors request insurance quotes on properties before they even make offers to purchase because the numbers tell the story about the home's return on investment. And when running budgets, you have to plan for significant insurance premium increases annually. So here we are in a state with high risk, growing costs, fewer insurance providers, more regulatory barriers, and a general malaise of acceptance, a feeling that there's nothing we can do, and it's not whether our rates are going to go up, but how much, or if we're even going to be able to get coverage at all. Well, there is something you can do. Maybe you can't afford higher costs next year, but maybe you can temper it even a little. By educating yourself about the market and then doing a little bit of homework, you may be able to cap those increases, at least a little, and sweeten your rental investment because every dollar counts. If you have questions about anything you've heard here today, call me directly at 951-314-5402. I'm happy to share. You can also find valuable information on our website, dreambigpm.com. If you're concerned about your current insurance coverage, we work with trusted insurance brokers who specialize in California. Call us and we'll connect you with a professional. And as always, if you found this information useful, please do us a favor and like and subscribe so that we can help others just like you. Don't be accidental about your future. Be intentional to your success.